Aloha, YouTube. How are all you investors doing today? My name is David Yansen. Welcome to my channel. Today is October 22nd. It is Thursday, 2020, and we are talking earnings as it is earnings season right now. And we're going through my portfolios. I have three main portfolios. M1 Finance has my Roth IRA. Robinhood has my growth portfolio, and Fidelity is another dividend growth portfolio that I have that I moved from M1 Finance at one time. If you want to see any previous videos about earnings from this week or last week, check the playlist down below. I have everything organized by brokerage, so just click on the brokerage and then you'll see the title for the individual companies. You can also see a breakdown of all of my holdings from all of my brokerages in the playlist as well too. So feel free to go through my playlist and click on the videos that you find interesting there. There are a lot, so pace yourself, but I think you'll enjoy what you find in the playlist. So in this video we are talking Sirius XM Radio and Kimberly-Clark. Those are the two. I actually have one more holding that I haven't done a video that reported earnings today. I might just hold off until tomorrow to do that one. It is People's United Financials. So look for that video. Also at the end of the week, which will be tomorrow, Friday, I will have my dividend tracker video for you. That video shows you how much I'm going to be paid in dividends for 2020, and it has an estimated projection all the way out to 2044, 25 years of estimated how much I'll be paid in dividends for 25 years out. So look for that video tomorrow. It might drop Saturday morning, but I probably will get it done tomorrow night. So right now it is about 9:30 p.m. Hawaii Standard Time. So if it's morning time and you're watching this, good morning. If it's evening, I hope you had a great day. So let's look at Sirius XM Radio. They did beat, as you can see here on Seeking Alpha, it says revenue of 2.3 billion, which beats by 90 million, M, not B. And then as far as earnings per share, they beat by 1 cent of 6 cents. So let's go over here to market beat and a little bit more information about SiriusXM Radio. Oh, by the way, if you're not familiar with SiriusXM Radio, they are a satellite radio company, so you can get sports, talk shows, comedy type stuff, everything from any type of radio station in the United States you can get by subscription with SiriusXM Radio. So that's how they make the majority of their money, is by subscribers. So that is what I like about the company. I actually got the company for free when I signed up for Robinhood. So in my opinion, they are the best of the free stocks that I've gotten. No, the stock doesn't trade very well, even though there's an analyst, I can't remember if it's Bank of America, Goldman Sachs, or JP Morgan, a couple weeks ago that said that they expect the stock to start trading at about $7. So I ended up buying an additional share. So now, if you were to look at my Robinhood portfolio, let me just show you this really quick and then we'll go back to business. You can see here that I own 3 shares at an average cost of $4.03, and my total return is 48%. At one time it was well over 50%, but you know, the stock market has been pretty volatile this year, especially in October. September was kind of more in the red, and October has been more of a mixed bag. So they do pay a dividend, which is what I like, and which is what makes me think maybe I will buy more into them, is because they do pay a dividend, not a good dividend. It's only 3 cents per quarter, I believe, per share that you own. But they do have a good balance sheet, and they're subscription based. Howard Stern is the main guy for SiriusXM Radio, and it has been rumored that they're going to extend his contract for $100 million. So, you know, he's doing something good for the company. So looking at market beat here, you can see the other numbers here. The firm had revenue of $2.03 billion for the quarter. Consensus estimate was $1.94 billion. Its quarterly revenue was up 0.7%. So they don't do great numbers, and the stock doesn't trade very well. But if you're looking for a cheap company, I know on the news and in different articles you'll hear people talk about Robinhood traders and stuff like that. If you're new and you just kind of want to dip your toes and see how the stock market kind of works with a solid company that's not going to go bankrupt on you, I would recommend starting with Siri. It's really cheap. They do have a strong balance sheet. So, I mean, now the stock isn't going to trade very, very well, but if you get in low right now at the $5 mark, and then it eventually moves up to $6 or $7, which isn't uncommon for it to actually be around $6, then you can kind of determine whether or not you want to hold on to it for that 3 cent dividend, depending on how many shares you have, or if you just want to move on to bigger things. That's kind of how I started out. It's just my personal opinion. Do your own research, but I started out with Ford. I got rid of them once they suspended their dividend, and I started out with some other companies that I have done that I've already gotten rid of stuff. I do have a few others that I'm still considering getting rid of, but I'll probably end up keeping them because they do pay a nice dividend. So Kimberly-Clark is the other company. I own this company in not Procter and Gamble. Kimberly-Clark is compared to Procter and Gamble as they basically do the same thing. I own them in my M1 Finance. They're in my Roth IRA. They are a dividend aristocrat, so a minimum of 25 years of increasing their dividend payment. And their earnings for this quarter did miss, but their revenue was good. So the revenue of 4.68 billion beats by 90 million. Organic growth of over 3%, or I guess right at 3%, and the consensus was 1.8%. So, but they missed by 1 cent. So nothing really to be upset about if you're not familiar with Kimberly-Clark, and really nothing to be upset about because they are a dividend aristocrat. So a lot of companies, once they get into dividend aristocrat status, they are more focused on that dividend and making sure that their shareholders get paid, because some are looking for a reliable income. And once you start to get that reliable income after so many years being invested in a company, that company knows that if they slash the dividend or suspend the dividend, that they could all of a sudden lose a lot of people that have invested in their stock. So, but if you're not familiar with Kimberly-Clark, their main competitor, I say, would be Procter and Gamble. I personally like Procter and Gamble better than Kimberly-Clark, but they both basically do the same thing. You can see some of their products here. Huggies, pull-ups, little swimmers, good nights. They also do personal care products, soaps, towels, tissues, Scott's, toilet paper, Cottonelle toilet paper, Kleenex, all those types of products that they have. And the thing that I like about Kimberly-Clark and Procter and Gamble, as far as being consumer defensive, is they're not just consumer defensive, but a lot of their products are sold on Amazon. So they're not just reliant on Target, Walmart, and your local grocery store, as Amazon is pretty much taking over the world and is the leader in e-commerce. So some of my companies I've chosen just because they sell on Amazon. So I've been looking at Stanley Black & Decker. When the time is right, not so much because of the price, because they're a dividend aristocrat as well too, but when the time is right, I would like to add Stanley Black & Decker because they sell retail and they sell on Amazon as well. So, but going back to Kimberly-Clark here, you can see their numbers up 1% net sales, 4.7 billion, like we mentioned earlier. And then I like this Alpha Street website here. It doesn't do this for all the companies. Like, it didn't have for Tesla, it didn't have for Sirius XM Radio, and a couple other holdings that I have reported on this week and last week, but it does here for Kimberly-Clark. So I like how organized everything is set right here. So you can see all their numbers. Here is a quote by their CEO. I did watch an interview with him this morning on CNBC. The quote is, we delivered solid organic sales growth in the third quarter with good underlying performance and increased demand. We also achieved 140 million of cost savings and returned approximately 560 million to shareholders through dividends and share repurchases. So this is another one of those companies that, in my opinion, if you're now starting out, kind of make them the foundation of your stocks. You know, Procter and Gamble, Kimberly-Clark, AT&T, Verizon, of course, you know, Apple, Microsoft. But this is a consumer defensive company, and being a dividend aristocrat, you can look for solid dividend income from them for years to come. So other videos coming up next week. I can't think of what they are now off the top of my head. It just left me. But I will do People's United Financial tomorrow, and then also look for my dividend tracker video and check my playlist for all my other videos. So have a great day, everybody. Mahalo and aloha.